Hi everyone, and welcome to a brand new episode. I'm Marcus. In today's episode, we're looking at Ford Motor Company. We'll cover the income statement, balance sheet, cash flow, key figure, our key feature, and a technical analysis. Is the company worth buying? Let's find out. As I mentioned, we're looking at Ford Motor Company, and they are traded on New York Stock Exchange and are in the manufacturing sector. If we go down to the screen, we can see here that their market capitalization is at $86.5 billion and their revenue is at $134 billion. The PE ratio is at 53. Now guys, normally I like companies with a PE ratio of 20 or below. So having 53, that is just way too high for me. So that is a no. Now, I want you to bear in mind, when you see a company with a high PE ratio, that tells you that the market expectation of that stock is high, and there are good chances that you see capital gains on those stocks. But the overhanging risk is if the company cannot meet those expectations, we will see the stock price fall. Same thing goes when you see a stock with a low PE ratio. That tells you that the market expectation of the stock is low, and therefore you might not see capital gains on those stocks. So just bear in mind. Now, profit margin is at 2%. Normally I like companies with a profit margin of 15% or higher. So having 2%, that is just way too low for me. So that is a no. Now, price to sales ratio is at 0.6. I like it because I like companies with a price to sales ratio of maximum 4. So this is a go for me. Price to book value is at 2.3. Normally I like companies with a price to book value of maximum 3. So 2.3, that is a go for me. Now, if we were to summarize, PE ratio is too high, price to sales ratio within my range, and price to book value also within my range. This tells me that Ford Motor Company at its current state is overvalued, and we need to see the stock price either the decline or the earnings increase for it to become more attractive and undervalued. Now, they have cut their dividend, which is a shame because I like those recurring income. Effective return was at 1.9%. A bit low, so that is a no for me. I would like to see a range between 2.5-3%, but I want you to be very cautious because there are companies with effective return of 3%, 4%, even 5%, but there is an overhanging risk here because if you buy those stocks, you might not see capital gains on those stocks. So the risk is when it comes time to exit the stock, you might not get a higher price than what you bought it for. So 1.9, that is too low for me. Return on equity, this number I have to report, but I know that the return on equity is at 8%, which is acceptable number. That is a go. Now guys, return on equity tells you about a company's ability to create return on their equity. It is especially critical when you have a stock that doesn't pay out dividends. You want to make sure you have a company that is able to create return on their capital you about to invest in them. So 8%, that is a go. I like that. Now, return on asset, 0.72%. That is just way too low for me. So that is a no. Now, the stock is currently traded at $20 per share. If you go down to the 50-day moving average, we can see that we are trading below the 50-day moving average, but above the 200-day moving average. This tells me that there are uncertainty here. The signal doesn't tell you whether the stock will increase or if it will decrease. But if we glance at the chart, we can see that we have been moving in a positive trend channel. And I also actually broke the trend channel here, and I have moved back down to the channel. But we'll take a closer look at the technical aspect of the stock further down. But let's jump over to the income statement. And what we're interested in here is that the current total revenue, and we can see we went from $151.8 billion down to $127 billion, and we grew a couple of years and then we fell for the last 2 years. So that is a negative. I would like to see a continuation, a continued development here. Gross profit went from $4.1 billion down to negative 800 million, and also here we grew a couple of years, but for the last 2 years we've been seeing lower numbers, so that is negative. Net income went from $4.6 billion down to negative $1.3 billion, and also we grew 1 year. Then for the last 3 years, we've seen lower and lower numbers. So that is negative. Now let's jump over to the balance sheet. And what we're interested here is that the current assets versus the current liabilities, and we can see that there is a huge difference between the current assets and the current liabilities, basically telling you if the company were to convert their current assets to cash, they are able to pay off their current liabilities, which is positive. I like that. So that is a plus, but they are far from being able to pay off the total liabilities, which is negative. So that is a minus. If we take a closer look at the total liabilities, we went from $208 billion up to $236 billion, and the numbers have been growing steadily every year. That is negative. I would like to see them at least start reducing their total liabilities. If we go over to the outstanding shares, we can see that it hasn't moved over the past 5 years, which is negative. I would like to see the company doing buybacks. What happens is when the company is doing buybacks, that means that your share of the company is growing. And when you see a company issuing shares, that's a way for a company to bring in more capital without taking on more debt. So what happens when the issue of shares is that means that your share of the company is being diluted, is decreasing. So seeing that the numbers haven't changed over the past 5 years, that is negative. So that is a minus. Now let's jump over to the cash flow. What we're interested here is that the operating cash flow versus the capital expenditure, and we can see here that the operating cash flow landed at $24.3 billion and capital expenditure of $5.7 billion, a difference around $18 billion, which is positive. I like that. Now when you look at the operating cash flow, it went from $32 billion down to $24 billion, and also the number we fell and then have for the last 3 years doing better and better numbers. So that is a plus. Looking at the capital expenditure, went from $7 billion down to $5.7 billion, and also the number were unchanged, and we grew 1 year and then we've seen a bit lower number. But so that is also a negative. I would like to see them continue to invest in the business. Now let's jump over to the key figures, and what we can see here is that the earnings per share went from $1.16 per share down to negative 32 cents, and we grew a couple of years, but have for the last 2 years seen lower numbers. So that is a negative. Now revenue per share went from $38 per share down to $31.9 per share, and also here we grew a couple of years and fell off the last 2 years. So that is a negative. Equity per share went from $7.34 up to $7.71. So that is a growth, but we have been growing steadily every year, but fell off for the last 2 years. But overall trend is negative. We'd like to see them continue to do better and better numbers. Now I want you to be just clear that these are still very good numbers, but just we're seeing a counter trend here. So dividend per share went from 85 cents down to 15 cents, and also the numbers have been lower and lower every year. That is a minus. I do like the recurrent income that they pay out dividends, but at the same time I would like to see that income grow every year, and by here we're seeing that the dividend share is lower and lower every year. So that is a minus, and dividend share is a bit of fluctuation here. We have 73%, 33, 79, and I have to check a bit closer at these numbers, but I'm not liking this at all. So that is a minus, because I want to see a company that pays out less than 60% of that capital, because I want some of that capital to remain in the business for acquisitions, for investment, and just strengthening the overall business. So paying out larger than 60%, that is a no for me. Gross margin went from 2.7% down to negative 0.63%, and also we improved a couple of years, but for the last 2 years we're seeing lower numbers. So that is negative. The company needs to find ways to become more efficient. Now bear in mind, we have to compare this number across the industry and see how is Ford Motor Company doing compared to the competitors. But I would like to see them improve. The cost of goods sold is growing here, so they need to find ways to become more efficient. These numbers, I'm not liking it at all. So that is negative. Operating margin went from 4.4% down to negative 0.8%. 88%, and also we improved 1 year, but overall numbers here for the last 3 years have been lower, so that is negative. The profit margin went from 3% down to -1%, and also we improved 1 year, but then for the last 3 years doing lower numbers, that is negative. Return on equity, as I mentioned, tells you about a company's ability to create return on their equity, especially when you have a company that has cut their dividend or doesn't pay any dividend. You want to make sure you have a company with a positive return on equity, and also that they're able to create a return on the capital you're about to invest in them. Seeing that Ford Motor Company went from 15.7% down to -4%, and we improved that 1 year, but have for the last 3 years seeing lower numbers, so that is negative. Return on assets went from 1.9% down to -4.8, -0.48%, and also we grew 1 year, but have since seen lower numbers, that is negative. Solidity tells you about a company's financial strength for the long term, and here we went from 12% down to 11.4%, and also we grew 1 year, 2 years, have that since then seeing lower and lower numbers, so we've seen a counter trend here, so that is negative. Balance sheet liquidity went from 2.3 down to 2.2, and balance sheet liquidity tells you about a company's financial strength for the short term, and here went from 2.3 down to 2.2, and also we improved the numbers for the last 3 years, for 2 years straight, and then have seen lower numbers, so that is negative. Debt ratio went from 7.15 up to 7.70, and also we've seen a bit of fluctuation here. We fell a couple of years, and then we improved. Well, the numbers grew and have been growing for the last 2 years. That is negative. Basically, what happened here in 2020, having 7.7, that means that the company has 7.70 times more debt than equity, and seeing that these numbers are growing, that is negative. So that is negative. Now, guys, we have gone through the income statement, balance sheet, cash flow, key figures. Now over to our key feature, which is the pillars. So basically what the pillar does is that it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If you go down to the screen to summarize, we can see that the PE ratio is above 20, which is negative. They have cut the dividends, which is negative, and the dividend payout share is below 60% some of the years, which is positive. Dividend decreased over the past 5 years, negative, and number of outstanding shares have been unchanged over the past 5 years, that is negative. Revenue decreased over the past 5 years, negative. Profit margin below 15%, negative. Profit decreased over the past 5 years, negative. Current assets is greater than current liabilities, which is positive. And solidity decreased over the past 5 years, negative. Balance sheet liquidity decreased over the past 5 years, negative. Debt equity ratio increased over the past 5 years, negative, and the total liabilities have grown for the past 5 years, negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. You can have this software along with everything we've gone through for only $10 per month, and you get access to chat with me alongside other members. So jump over to comments.sc and become a member today. All right, now let's take a closer look at the technical aspect of the stock. So here we have the chart. As you guys can tell, we have been moving within a positive trend channel here, and also you can see that we broke out of this channel and have been moving, and I can see here that I believe there were a lot of investors looking at this area very carefully. As we can see here that when we broke out of this channel, the stock hit this level, this resistance line, and have been fluctuating a bit. Also, so I believe there were a lot of investors looking for ways, because what happened here is all of a sudden we have a ascending triangle, basically meaning that we might see the stock price break out of that triangle, and which it did and has been moving higher levels. But I believe what happened here is that is due to the the Fed tapering, the improvement of their balance sheet, also the inflation and interest rates that push the stock price back, because we have seen for the past few days that the growth stocks have been falling. 4 of 10 stocks have fallen over 50%. And what happened, we can see that this have pushed the price even lower to a lower levels, and almost back to the channel here. Now, is this an area to buy? I believe I would be very cautious and be very patient and wait at least until March, April, and see how the stock market reposition itself. We should see the stock price move somewhere along this area here, and that's where I would be buying the stock. Because this is an interesting stock, and it has been moving. It hasn't developed as rapidly as some of the other stocks such as AMD, Microsoft, but still this is a strong business with a strong future. And I believe when this stock price moves down to this area, then it becomes very interesting to buy. So that's how I would trade the stock. How would you trade the stock? Please let me know in the comment section below, and also what you think and stocks you want me to take a look at. And if you have any question, or if there's any way I can be of service to you, please let me know. Until next time, guys, take care, and I'll see you soon. Bye bye.